Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, Jeffery sits down with Royston Da Costa, Assistant Group Treasurer at Ferguson PLC, to discuss the background of digital challenges facing Treasury today. They provide valuable insights on how to harness potential technology to capture the data within companies and groups to allow treasurers to evaluate the forecasts they desire more effectively.
Welcome to the Treasury Update podcast. This is Jeffery, and I'm joined again by Royston Da Costa, who's the Assistant Group Treasurer at Ferguson. I want to welcome you to this podcast as well, Royston.
Well, thank you, Greg. Much appreciate you inviting me to this podcast. Let me start by introducing just a brief summary of my role. Ferguson PLC is the world's leading specialist distributor of plumbing and heating products. At the end of July last year, 2018, we generated $20.8 billion with trading profit of $1.5 billion. We have 2,300 branches, 33,000 employees, and we're based in the UK, but our large subsidiary, which is Ferguson, is based in Newport News in Virginia, hence the reason why we changed our name from what used to be Wolseley to Ferguson last year. I've been with Ferguson coming up to 17 years, but my current role's been in charge of driving the strategy for our treasury technology for the last 3 years. And before that, I was in charge of the cash management and foreign exchange for our business.
Excellent. Thanks, Royston. So Royston's team has won a prestigious TMI award on technology excellence on future-proofing Treasury, and our podcast topic for today is a digital strategy for Treasury. And let me just begin by setting the stage quickly and then turning it over to Royston to talk on the background of digital challenges facing Treasury. I think most people in Treasury and that are paying attention to technology have seen technology change dramatically in a number of areas and venues, from how we connect to banks, how we enable transactions, how we have our systems supported, whether they're hosted internally, hosted externally, or SaaS level systems. And that has been coupled with changing expectations from the board level down and increased requirements. Anything else on the background of the digital challenges facing Treasury, the environment that we find Treasury in technologically?
So for me, the digital challenge is clearly ongoing, and it's still, I guess, for a lot of corporates, an unknown entity in some ways. I would say if you look at how Treasury has evolved, certainly I've been in Treasury coming up to 29 years, it's only really in the last 4 or 5 years, perhaps, I would say there's been a dramatic increase in certainly the level of technology and the advance of that technology within Treasury functions and what's been available to us. And various reasons for that, I would say. If you think in terms of the evolution of a lot of what we use today, if you look at, say, the iPad, the iPhone, Spotify, Netflix, Uber, a lot of these companies that we're very familiar with today didn't exist before 2006. So, sometimes we kind of forget that the way the technology is evolving is so rapid and the impact it's having is so significant that you can almost be forgiven for kind of being caught short of breath when you look or pinch yourself and you think, oh my gosh, what does this mean? What's going to add to my role, to my company? Obviously, there are a lot of myths out there, in my view, in terms of technology, and certainly as far as trade is concerned. One of the biggest drivers created the role I've got now and has given me the focus I've got has been our quest to automate. And we recognize that because of the technology that's been available, that is available. And in saying that, I immediately am conscious of a lot of treasurers or treasury functions being concerned that technology will effectively make their role redundant. And I think that's wrong. That's not correct in my view. And the reason I say it is very simply this: the automation that we've experienced here in Ferguson hasn't resulted in loss of anyone's role or jobs. What it has done, though, has made us more efficient in terms of processes we run, and it's what I like to call it future-proofed us for future growth, not just in terms of the size of our company, but in terms of the interaction we have with our businesses. Because it's allowed us to now focus on much more value-added tasks, we're in a position now to not just have to run around pressing buttons to run reports. We can actually review the reports and be much more supportive and much more value-added to the business. So I think that's a big key factor to kind of be aware of. And when you say the digital challenges facing Treasury, for me, it's about the data. It's about how we can harness the potential technology that's out there to capture the information that we have within our companies, within our groups, to allow us to interrogate and evaluate the forecast that we so all desire much more effectively.
Yeah, that's a great background for some of the digital challenges and even the digital challenges on the role, right? Positions may not go away, but certainly some tasks do. If you're a person who just does key entry, that's not going to be a real sustainable role when that part can be fully automated, but there's many other things that can be done and controlled by people in a more powerful way. You and I had spoken a few weeks back about how you see the Treasurer's openness to newer technology changing. Why don't you go through some of those examples and then explain why you think this change in mindset is happening?
I guess it's one of those classic cases where, with Treasury in particular, we are fairly similar, to be say, to how banks work in many areas. And we're fairly conservative, let's be clear. We're not really cutting edge or looking to be pioneers of the new technology that's out there. We're not a software company, certainly as Ferguson. And so when it comes to the area of technology, I can definitely recognize why a lot of companies, treasurers, treasury departments are reluctant to engage with technology for that reason. The other reason potentially could be the fact that Treasury for a long time has always managed on a very lean level of resource, whether it's numbers of employees, and this is generalization, I know, or in terms of budget. But I think with technology, what you've got is a lot of those factors are now being challenged, if not kind of being rejected on the basis that you've not got the level of costs that were required historically when you installed a solution on your server and had to go through the process of upgrading and updating and maintaining that system. Now you can pretty much get a SaaS or cloud-based solution off the shelf, plug and play as we call it, for a very, very reasonable cost. And certainly for us in Ferguson, we're able to use the solution we've got and roll it out to multiple users without having to worry for paying the additional cost for each user or license. So that's kind of a big kind of benefit and a positive aspect of engaging in new technology. Also, the fact that historically, and this is something I've seen in the US in some of the reports that I've looked at before, where there's almost an element of, the old saying, if it ain't broke, why fix it? Which I get because, it's like any kind of business case you want to put forward to your CFO, you've got to demonstrate that there's a benefit behind the cost that you're going to incur. But what I feel different now and what I'm seeing more and more is it's not enough to say that. For a start, the cost isn't that great. But secondly, even if you say that, okay, we've got someone doing this job, taking them an hour and a half to run it, I'm going to pay X amount to get a system that will automate that job. What's the benefit in doing that? Well, for me, it's about future-proofing again. And that future-proofing aspect I'm referring to comes down to regulation and, again, cybercrime, control, compliance, the whole kind of package there. Because by using a system, there's no question in my mind that you are getting a better level of security around the data that you're putting into the system, as opposed to using a spreadsheet or another database maybe, which not as protected. But then regulation, you've had EMIR, we've got GDPR, we've got MiFID II. There's lots of other regulation that's come up recently and potentially coming up, where the systems that we have currently allow us to meet that regulation with minimal disruption. And to me, that's a benefit that's not, you can't necessarily quantify that in financial saving terms, but it's invaluable.
You've used the phrase a digital strategy for Treasury. Maybe you could describe and build on what you've already said in terms of building and having a digital strategy in the Treasury context. And then let's talk about what that looks like at Ferguson, because you have some very interesting stories from your context.
Yes. What was interesting to me, again, is I was very fortunate to be able to attend the AFP conference for the first time in my career. And then I went to the conference in Chicago last year. And between the two conferences, and I believe the AFP conference is quite a large conference, it's attended by over something like 6,000 delegates. And it's the equivalent of what we have in the UK of the Associated Corporate Treasurers annual conference. It's an Association of Financial Professionals in the US. A lot of the largest companies were in attendance. You had the Googles and the Amazons and the Ubers all there. And certainly multiple sessions being held. It's quite a large venue typically that they would have the conference at. But what came across to me was when I come to the conference in San Diego, there was lots of mention and talk about blockchain, AI, and digital strategy. And I didn't see a lot of interaction or, let's say, positive response when the surveys came up in the particular session I went to. It seemed like very few hands went up when they were asked about AI or any kind of interaction on the digital, or even trading management solution implementation kind of experience. But when I attended the one in Chicago in September last year, I was quite impressed, if not almost shocked, to see when the question was asked of the audience, and this is one I think that was led by Duracell on something to do with AI and digital strategy, pretty much 90% of the audience put their hands up to say either they'd already got a strategy in place, digital strategy in place, or were in the process of putting one in place, which quite a significant indication to me that companies are beginning to finally recognize, and certainly when I say companies, I'm thinking Treasury departments in particular, that it's vital that they engage and begin to look at the whole digital landscape very seriously. Because at the very least, it's not just about we want to put in a treasury management solution for the sake of it because everyone else is doing it. To me, it's much more than that. It's about ensuring that you as a company are protected. You're beginning to tap into the efficiencies and the synergies that that solution can offer you. But as I said before, as we see technology beginning to evolve, not just in terms of the companies work for, but in the wider industry, it's almost like a requirement now. If you want to, sort of interface with another part of the business, you have to have the right up-to-date solution. Because that's the other issue or challenge that companies are facing. If they haven't got a solution that's able to communicate with a cloud-based solution, then there's an element of cost and potentially more disruption that could cause. Thinking of the end goal, which I know we've kind of not focused on deliberately or specifically so far, we're all genuine business, frankly, to serve our customers. And if our customers are experiencing and requiring an experience that makes their life as easy as possible, just as they're used to when they go onto their mobile phones and they engage with an app, so they can book an Uber or they can download some music using Spotify or whatever the product is. That's now become the benchmark, in my view, for companies like ourselves to engage with customers. Admittedly, we have a particular service that we offer, which is quite niche and it's quite bespoke in terms of the value-added service we offer our trade customers. My point being is that the choice, particularly when it comes to something like payments, it's actually paramount that companies are able to keep up with the technology and offer that level of service. And that's the key word now. It's service that customers are looking for. It's a level of experience, not just the product.
You talk about the cloud quite a bit, and at Ferguson, you, quote, do the cloud, end quote, heavily. Tell me about Treasury cloud use at Ferguson.
Yeah, so we have, quite I believe, 13 cloud-based solutions.
13?
Yeah, 13. And that's been really the driver for a lot of the automation that we now have. It's because we're able to use what we call Secure File Transfer Protocol, SFTP, to effectively automate a lot of the processes in the past that we've had to manually drive. I'll give you a few examples. So our market data generate the file every day. Very important process, but runs in the background. It's all seamless. We don't see any of that. So when we do our treasury transactions, our deals, we use 360T. That's that's another cloud-based solution. That information, once it's traded, comes automatically to our TMS provider and then gets generated electronic bank confirmation. And we use Finastra for that. Interesting enough, again, there it's very important that we also have an audit report that comes out separately to identify any deals that may have been traded which we haven't initiated. So there are a number of sort of aspects to some of the services that we use on the cloud that are incredibly value added for us. We also have we're on Swift now, and that's a big game changer for us. So Swift, as we all know, despite the unfortunate publicity they seem to get about being hacked, just quickly address that. My view and my understanding is that Swift wasn't hacked. What happened is one of their banks or users allowed a hacker into the system, and of course, ultimately, Swift is the victim, should we say? But in my view, that's not the case. So Swift is very secure, and obviously, like any system or any application, it's only as secure as the user that's using the system continues to follow the guidelines, the principles around using that system. For example, if you put a password out on your computer and then say, well, someone's hacked into your system, but not really. If you've opened the door for them to come into your system, that's not really hacking. So kind of that's where I see that. But coming back to Swift and how much of a game changer that's for us, in going live with Swift, what we were then able to do is implement the mobile app that our TMS provider had, and that's actually allowed us to approve payments remotely. And that's a huge, huge benefit for us as a team, because being a small team, it's so much more challenging when you're trying to attend a conference or trying to attend a meeting or just to be out of the office. And obviously payments have to be approved and sent. To be able to do this using the mobile app, it's fantastic, because it then gives us that flexibility to be able to engage with our business, with our third-party providers, our banks, and we know that we can still continue business as usual. So there's a live example here. Both my colleague and I were at the office. My colleague was somewhere fairly remote, let's say, and I think he managed to get a signal to be able to authorize the payment. I was actually going through customs in the Netherlands, of all places, at the time, and I was able to do the second approval on that payment. Both approvals went through seamlessly and in time. Again, just to reemphasize the point of how technology has been an enabler for us in that particular instance. And one thing I want to say, Craig, in terms of the various cloud-based solutions we've got, I'm not going to go through every single one of them. You'll be pleased to know, but the drivers for whenever we look at, or when I look at an application in terms of technology, are the four main pillars I use: visibility, connectivity, security, and cost savings or efficiencies. When I say visibility, I'm not talking about just cash visibility. I'm talking about visibility of all our treasury transactions. And inherently, that would include risks and cash flows. The connectivity mentioned earlier, it has to be able to connect with other systems in a seamless way. We don't want to be looking at a solution where you have to kind of spend a lot of time and cost in kind of creating interfaces and what have you. And a lot of the systems today are fairly flexible and do sort of speak to each other quite easily. The security aspect, as I said before, is so important for us, and I think for most treasurers. It goes without saying, as I said, in terms of due diligence, we always make sure that whatever software or application we look at has to meet our requirements, not just from an IT perspective, but also from a treasury perspective and from an internal audit perspective. And then the cost savings that would realize. So I recognize that sometimes certain projects we've implemented, there's not an immediate cost saving in terms of financial benefit, possibly because the scalability of that particular implementation isn't as big as, say, some other projects might be. But what I would say is there are time savings and benefits which aren't necessarily quantifiable from a financial perspective, but from a risk perspective. And those mean sometimes more to the business and certainly to a CFO than the financial benefits. So let's not lose sight of those benefits as well. And I think that's something that we've definitely seen within Ferguson in terms of the controls and the additional kind of compliance that we've experienced from the solutions we've put in place.
As you think about advising others or giving them points to proceed, how would you provide guidance to someone about their digital strategy, making a digital strategy for Treasury? How formal does it need to be? Do they need to socialize it in the organization? How would they best go about developing their digital strategy and then obviously executing on it?
In order to develop a digital strategy, you really need to take a step back, like any kind of change that you want to implement, and look at where you are. Look at what you've got. I know it sounds almost glib to say this, but it's so true. You want to identify where you want to get to. So when we looked at our, let's say, digital strategy that we now have, it was very clear to us, and certainly our senior management, our board, they wanted us to automate and to improve the straight-through processing and the benefits that would bring with it. In terms of how formal you make it, it's not a pre-requirement, I don't think, but I would say it would certainly make sense to have something documented, because when you come to presenting a business case, that to me would be very much part of your business case to demonstrate that this is what you're looking to do and you're aiming to achieve. Looking ahead, I would say you want to make sure that you're engaged with your third parties. Now, it may be rather that you haven't got a TMS provider or fintech company like we have with 360 and some of the other companies that we engage with. So you might just have a couple of banks, and I'm sure most corporates do have that at least. I would start there, in fact, because you may find, and depending on which bank you bank with, they can be a wealth of information if you engage with the right people. I'm fortunate with the banks that we have here, they all have thriving fintech innovation hub type division. And from time to time, they'll have meetings with other clients and will invite me along to hear what they are working on with other fintech providers. And it's a good way of actually keeping up to date, if you like, with what's out there and what's maybe coming up and what the bank might be working on. But they will definitely be one source for helping you to develop that sort of strategy in terms of what's out there. And it's a good place to start, potentially, if you've not got a TMS provider. If you've got a TMS provider, then I would say they'll be your kind of primary contact, as we've done with Bellin, to not only help you to improve your understanding, but also to engage with them so that then you're partnering with them to ensure that you're on the same page. Very importantly, I'd also say, make sure you're engaged with your IT and internal audit. And what I mean by that is they are equally important stakeholders for building up any type of digital strategy you might have. Simple reason is IT, they're the gatekeepers for your technology. They're best placed, they have the expertise, and they should be fairly supportive when it comes to cloud-based technology and guiding you as to what's good and what's not good. We don't need to get into too much detail with them because we're not technical experts. We should be able to have at least a fairly high-level discussion. Even if you're talking about just a mobile app, at the very least, they should be able to guide you on that. And then the internal audit aspect, I think, is very important as well, because you get buy-in from internal audit in terms of some of the benefits and sort of the compliance and controls that you're going to be able to achieve from implementing your digital strategy. That will go a long way, I believe. It certainly has in our case in getting the business case past your senior management and particularly your CFO. Because if you've got the rubber stamp from internal audit and IT, you're pretty much home and dry, to be fair.
Thank you, Royston. I loved your thoughts on a digital strategy for Treasury and what you've done. Thanks for sharing it with our audience.
It was my pleasure to see.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.